Africa, looking at the Kenyan markets and what we saw on that end for the day, 4,719 points. So a flat close for the day, and a quick check-in on how the currency is faring, of course, in light of the uncertainty still around the election result. We've got the shilling trading at 85.75 against the greenback, and you're looking at a dollar strength around a fifth of a percent stronger as it stands this hour. Let's get into some of these issues, some of the factors driving the shilling, some of the factors driving the bond market. We've got Crispus Otieno, fixed income dealer at AIB Capital, standing by. Thanks for joining us, Crispus. Let's just take a look at the issues around the, of course, uncertainty around a potential rerun of the election, the tightly contested election. We know Raila Odinga is contesting the results. What's the sense from a market's perspective as to how this might play out and how it might impact key areas of the market, like the bond market?
I've seen, judging from the election itself that took place in the last 2 weeks, we've seen that in Kenya we've been able to divorce politics from business. Really, there's nothing much of an impact apart from a bit of an apprehension, but the fires and the bonfires that everyone was waiting for, that came to pass. That's an indication that we have matured, politically, and that the level of tolerance is high. As per the bonds market, I don't expect it to boil down much into the bonds market, because you know, those are two different things. Government borrowing cannot really be is divorced from politics.
Now, just looking at the overall market, I mean, it has been slightly on the back foot. We see a flat close for the day, and we saw that strong rebound post the announcement of Kenyatta as the next president. But overall, right now, what is your view in terms of where the markets are headed? Do you see more upside from here, given the fact that we've got most of the results out to look at and unpack, and we know, of course, with some degree of certainty, how the political landscape is starting to shape up?
Actually, an interesting perspective is that just before the elections, there was a lot of liquidity that was being held up. So right now, we're having that liquidity being released in the market. We had the 10-year and the 3-year auction today. The results are yet to be out. But of course, I'm expecting a bit of oversubscription, a lot of participation from the market players, judging from what I've seen, judging from the few applications that passed through my hands. So really, as the bonds market in general, I expect it to be a bit more active. You've seen the last 2-3 days we've crossed the 1 billion mark, and for me that's an indication of things to come. I actually expect yields to start coming down.
Certainly, I mean, 2.3 billion shillings worth traded today, and as you say, you're seeing that that flood of money moving back into the market. Talk to us about the bond auction that was held today. What type of appetite was there for government debt?
Actually, like I said before, the results are not yet out. But judging from what I've felt talking to the market participants, I'm seeing that there's a high investor participation as opposed to maybe the last 2 auctions. There's been quite a bit of build-up in liquidity. We saw in the press the other day, insurance firms are having a lot of money, a lot of cash they got from insuring the political risk. So all that has to be put in somewhere. And that, of course, is going to come into the bonds market and also the equities market. But I've seen quite a big sum coming to the bonds market in the last few.
What's your sense as to the increased trade on the infrastructure bond? If you're looking at specific government bonds right now, what's your sense as to what's driving that specifically? Is it just in line with the trend, or anything outside of that, and specifically around the pricing action in that infrastructure bond that is driving activity and demand for that?
The last few, ever since October last year, we had the yields on the infrastructure bond coming down. But in the last few weeks, there's been a lot of demand from both the local and foreign investors, and that has actually driven down the yield. So we are having yields of maybe 11.8 to 11.7. And also, again, infrastructure bonds are a very they're a beautiful instrument in that they're tax exempt. So really, the demand for them should be also a bit high.